Good morning, everyone. It is the break of dawn over here in London. If you are here for the first time, welcome to TopstepTV. This is the London session. My name is Deeyana Angelo, and I've been trading for 17 years all in. 12 years out of that, I've been trading futures, mainly specializing in crude oil and crude oil and metals, but I also occasionally dip into equities markets, usually in the power hour segment, and sometimes in Asia if I can't sleep. And my markets for those sorts of times of day are ES or Nikkei respectively. We're still trying to get DAX into Topstep X, so I'm going to do my plug to the community to try and bring Eurex in a little bit quicker. So I'm just going to find that link for you guys. So if we want DAX, which would be the appropriate product for this time of day, this would be the feature voting post to do that, right? All right, Bruno is reminding me to put the full screen on. Thanks, Bruno. He's our lovely moderator taking care of us behind the scenes and grabbing questions and also reminding me to put the full screen on. All right, so yeah, I see some people saying, oh, Dee named her Express account Coffee. Yes, so this is my account. It's kind of like the main XFA. I do have a live account with Topstep as well, but since we still don't have those designated products for the London session, I do try and stick to my XFAs for this part of the day. Because sometimes it's super quiet and then, you're trying to do a trade, nothing really happens. And that's actually one of my triggers that, if I'm in a trade that I thought was going to do something that it doesn't, on some level, it does affect me mentally. So because of that, I need to wake up first. Now, one thing with the daylight savings this week, over in the UK, we have already switched to the new time. So we are back to GMT. And that means if you're over in this part of the world, this is now 1 hour earlier than we normally stream. So as I'm talking now, we are in the second part of the initial balance. So there's nothing for me to do yet. We're going to see what happens after the initial balance is done. So I use this time to just map out my trades to see what the volume profile looks like, to see what we look like on large time frames. It is Monday, so that means we have to do that larger time frame bird's eye view, just to see where we are we at any swing extremes, are there any reversal patterns, what does the volume profile look like, do we have a lot of volume there. This is going to be pretty tricky to break through on first try especially. And then from there on out, I drill down into the market profile, intraday options data, and then try and match all of those levels with like a little bow so that I can come up with areas that have the highest probability of doing what I think they should be doing. Now, looking around, we have some headline risk in crude oil. So let's start with that, seeing how that is my main market. Obviously, we rolled last week, so that should be all done now. And we have the elections coming next week in the US. All of that represents headline risk for crude oil. Why? Because anytime there are any kind of political unrests or effectively a regime change potentially, that's going to mean some trouble for the markets, and it's always perceived as risky. So therefore, investors might be looking to adjust their inventories. They might be looking for downside risk protection as well, and all of that good stuff. So next week is going to be pretty wild. Now, one thing I want to announce is that next Monday, so one day before the elections, we're going to have Coach Jay joining us here. He is exquisitely good at analyzing volume, and even though we always come up with sort of the same areas, funny that, he has a very different way of breaking down the trade structure, but he's very good at that. And I really enjoy talking through levels and what we think should happen there. Are we seeing it? Are we not seeing it? We had Anne-Marie last week. She's equally as good. So she loves to talk through whether the trade makes sense at all. And I know that some people who come on this live stream, they're like, oh, so much talking for but this is what you need to do, right? If we're going to come up with a quality trade over quantity, so just clicking buttons, no rhyme or reason to it, oh, I think it's going to go this way, that's not the best way, right? We're looking for an edge. Now, if I look at what our tip of the week is currently, it is know your edge. I wish that I had like fancy splash screens and, you know, animations and stuff, but I don't, not for now. And I suppose I could try and set that up going forward. But basically, it's know your edge. And edge has to be specific to the context of whatever you're doing, right? It's also connected to the mental state, not just, oh yeah, this is the level and I think this is what should happen. So what happens if that doesn't transpire in the actual markets? Does that get you on tilt? Are you annoyed that you lost the trade? All of those are mental triggers, and I don't think that's talked about enough. When I was still a novice trader many moons ago now, it was always you go to a seminar or you go to be taught by someone and they're like, leave your emotions at the door. Yeah, that's not going to work because you're not a robot. So you need to learn to work with your emotions rather than ignoring them and just trying to be some kind of a psychopath that's like, no, this is not affecting me. Recognize that something is affecting you. That's the big sort of secret, right? And then try to actively get ahead of that next time. And that requires tracking, just like anything else that we track. We track our accuracy, we track our risk rewards. Why not also track how many times a particular undesirable outcome of whatever you're doing has had an effect on your mental state? That will be the defining thing between you doing well and you navigating a potential drawdown or even like getting a few paper cuts around the level because you have an idea and you're trying to front run a trade, but the price action decided to shoot up about 30 ticks higher and then turn around. But until that happened, because you didn't wait, what's happening? Well, now you have a few losses along the way that are like 10 ticks here, 10 ticks in there, and suddenly you're 300 down on the day, and it irks you, right? You're like, why did I do that? That's all something that can be worked with, but only if you work on it deliberately. And this is why we want to be prepared. We want to know what your edge is in the markets. And what does that mean? You have to be a bit more systematic about how you approach your day. So I like to start my week with this massive time frame bird's eye view. So let's have a look at what's going on the weekly chart in crude oil. Now, from my perspective, if I go quite far back, so this is March over here. This is where the low of this entire range started from. Then we went all the way up to 82.50. And then we sort of chopped around, and that's still the case. This is very choppy. As you can see, every single day has a different direction. This is what makes crude oil a little bit more challenging to trade rather than equities. Because if I compare this to, an equities product, this is like just a very, very normal trend, and it just up, liberal, pull back, up, pull back, up, pull back, up, right? But crude oil looks a bit messy, right? This is why some people are like, how the hell do you trade this? There's a way, believe it or not. But because crude oil has these intraday swings and roundabouts, I suppose, you will notice that nearly every single candle has big wicks either side. Doesn't matter how it ends up. And that's the nature of crude oil. This is how crude oil has been since I started trading it 12 years ago. And even when there is a trend, there's still a lot of sort of wicks intraday, right? And I mean, look at this. It's a downtrend, right? Downtrend on the weekly, but look, wick up, wick down, doji, wick up, wick down, down, wick up. So that's what makes it tricky. But that is also a big feature of crude oil where I have an edge. Why? Because I know the times of day when these sort of intraday reversals are more likely to happen, and that is a part of my method as well. So if I look at this on this big weekly chart, yes, there is some demand here, but the way I'm looking at this, we have space to the downside still. Now, does that mean it's going to happen today? Maybe not. We have some headline risk. We've had, let me just look at financial juice. So we did have Israeli strikes on Iran's oil facilities, which you would have thought would have brought an up move. But what happened, if I go to the 4-hour chart, we're looking at a gap down. So it's like, what gives, right? Like, why did that happen? It's because right now that's perceived as bad news. So therefore, not necessarily bad news for crude oil supply, just bad news in general. And the market participants have decided that that's going to cause a big gap down. So in a way, quite the opposite to what you might be thinking should be happening fundamentally. Now, is it possible that we go up today? Absolutely, right? But we need to find context. Now, crude oil does like to close the gaps, but usually it likes to close the technical gaps that are not this big. And I'm kind of feeling sorry for anyone who held a long into this position over the weekend, because that's painful, and this is why we try not to do that. This is where being an intraday trader is pretty stress-free on a Monday or a Sunday, because you're not going to be smacked across the face by about 200-300 ticks right at the start of the week. So again, that helps with the mental state. But is it possible that we eventually digest this news and think that, okay, well, what is going on with the oil production sites? Are they closing down? Are they still operational? If they're not operational, then yes, that might cause a little bit of a pullback. How much? No one knows. All right, nobody knows. For me to speculate that we're going to have a huge upside move, I don't do that. All I do is take in the information we already have on the chart, which is a pretty sizable gap down. And at some point, that gap may get filled once this focus on this particular Middle East conflict. I said that very weird, very weird. Conflict. My inner Eastern European is coming out. So yeah, at some point it might get closed because crude oil generally is in some sort of a weird sort of supply state at the moment. But today we don't have that. We just have a gap down that is still not being filled, and in fact they're trying to push it even lower now. I said that this is still an initial balance in London, so therefore I usually don't trade during that time. Sometimes if I see a smash through an Asia low in particular instruments, I might pop in a little trade, but for the most part, let's be honest, I'm usually not even awake at this time. This is like break of dawn for me, right? All right, so let's have a look at what's going on the profile. Okay, so profile obviously opening vastly below value with a massive gap. Whenever that happens, closing the gap on that same day is actually pretty low probability because this implies a repricing. Not impossible, there's still like 20% chance that we do go up and test the London value area, which is actually a little bit lower than the New York value area. So right now I'm seeing value area at 70.32. That's value low for London. And then higher up, we have the value low from NYMEX Friday at 71.32. So a big difference there. But nonetheless, both of these are very far away. They're more than 2% away from the actual London Open. That's a massive gap, okay? So from that point of view, I need to wait and see where they're going to extend the initial balance. That's my first sort of sign of the other time frame participants stepping in and either pushing it forward or, further down, or maybe reversing. So for me, this is like, do not touch until we have some more information. It's like, the strippers, right? Do not touch until you have more information. Just joking, obviously. Now, I'm looking at some options levels. Obviously, it fell out of bed, so that's not that useful. The only thing I have is the put support level at 65. That's obviously massively down. But there is some level up at 69.68 that might be within reach at some point today. However, where we are right now, there are no levels for me. So I'm going to move away from crude oil. So for now, crude oil is just sit and wait until we have more information. Let's see what else is happening. Let's take a look at something that didn't jump off a cliff. Platinum. Let's have a look at what's going on in platinum. And I will get to gold as well, because gold is another one of the risk products that could be useful. As always, Monday, starting on a weekly chart. We're still floating just underneath that weekly supply that I marked a while back. So there is a chance that some sellers appear with a little bit more commitment here. They are not that strong at the moment, though. So we're still floating just around overnight VWAP, which will become a little bit more apparent as I start to drill down. We tried to go lower, big bounce on Friday. This is now a daily chart. But look at this formation. For me, this would be some kind of a distribution. I like to call that a phase 3. And then the statistical probability of that will be phase 4, where we go into liquidation. So basically some sort of a downtrend where people start to liquidate their positions around these levels. But for the time being, for the purposes of the London session, again, it's very quiet. So we still need to keep our hands in our pockets and do other things until some more relevant levels appear. Now looking at intraday, we are opening with a bit of a gap up, but that gap is actually pretty much within reason, like 1% from the value area high, which is located at 1022.6. I have an options level at 1025, which I was using all last week to ping my levels either towards it or from it, and that worked really well. So seeing how they haven't really moved that much, I'm probably still going to be looking at a similar area. So I do have some other levels around 1020, so 1020 as well. Therefore, that whole area of massive sort of 5 points, 50 ticks, that's going to be 50 ticks. I think it's 50 ticks. Yeah. So all of that will remain in area of interest. So from 1025 all the way down to 1020, where we also have a little bit of a 4-hour demand. So this is the demand on 4 hours. Let me mark that for you. So 4-hour demand, that's where it is. And inside that massive demand, we also have that value area low from London at 1022. So that would speak to buyers stepping in around that level. So in between 10.25 and 10.20. Now, which of those is going to be reactive? Again, I don't know. I don't have a crystal ball presently. So that is definitely an area to look out for. If I go to look at the New York levels, so more sort of COMEX. This is a NYMEX product, bizarrely. I don't know why a metal is on the NYMEX exchange, but hey ho. So the value area is actually right where the price is now. So basically 1032 is value low and 1038 is value high. So this whole development is happening inside value from Friday NYMEX activities or COMEX activities. So because of that, if we stay here, it's probably going to be a pretty boring day on platinum. So again, it's not really enticing me to kind of go, hey, yes, trade me. If I go down to a 30-minute chart, you will see that we're glued exactly onto overnight VWAP. That's never a good sign. I like to trade products that have already moved away from VWAP for the London session because it means there's some juice in it, right? Somebody's looking at it, somebody's trading it. Right now, nothing. Absolutely nothing. So let's move on to maybe gold to see if they've done anything with that. And as always, starting on the weekly chart. And then maybe we can get into some questions and into creation of some hypos, because I could use platinum for that. I mean, gold just screaming up and up, isn't it? Look at it. Nuts. Last week with Anne-Marie, we did do a nice little short trade that continued. It literally just like continued to fall for most of the day. And from what I remember, I think it violently turned around. And then eventually just made an all-time high, which is like absolutely bonkers. So yeah, pretty strong market. If you can time it right, there might be a pullback opportunity, but again, it's highly, highly risky, especially if you're not like super skilled yet and you're not really sure of your edge and you haven't seen it play out a million times on gold. Yeah, it can be a bit tricky, but just looking at some of the levels, I have a level up at 2760 area. So that would put it sort of at the top of this range where we opened up for this week. I do believe that was that one of Hoag's levels as well? I think it might have been, from what I remember. Right, yeah, so it was the weekly kickoff high. Interesting, right? Hoag says 2760 is the area where they might adjust inventories. Sometimes his levels can act as a springboard, but there are definitely areas where the price sort of stutters at the very least, but most of the time it will actually turn around. So he is so spot on those levels that we really must take note. And that's why I always have it on my screen just to make sure that Hoag's levels are in sight. I don't know where the new weekly kickoff high is because JD does that manually and obviously he's not awake yet. So we're going to find out tomorrow where that is, or you guys are going to find out today. But yeah, so some of the levels that I have are nowhere near here. So I mean, if we do start to go into a free fall, I do see some space down to sort of let's say 2683. I mean, maybe even 2641. So those are all areas of higher volume or demand or speed bumps. But right now on a daily chart, this is definitely looking like a distribution, right? Whether it's going to be maybe reaccumulation, if you're going to go by Wyckoff, you know, it could happen, right? We've had it happen before. We had distribution potential. They tried it, and then it turned out to be a reaccumulation. Boom, new all-time high. Same thing here. We are distributing, then we're kind of falling off a cliff. Nope, we're going into all-time high. Boom. Scary stuff, just in time for Halloween, right? So we'll see. For now, all I can say is that there is a price agreement at these levels, so I would be leaning a little bit short here. Could be wrong. Obviously, I'm wrong a lot. And that's okay, because I have a higher risk reward, so nobody cares, right? I certainly don't. But yeah, when it comes to the profile, I mean, we are slightly above value. We're about to come into the average session range low at 27.43.3. But I would like to see that that London value high at 27.39 ballpark actually get tested. We have the Asia low just underneath that, and we have the overall three sessions in Asia low, meaning that all 3 Asia sessions are active. That low is just above that at 27.38.5. So on an intraday time frame, we have a whole loads of bunched up levels around that 27.38.39 area. So let's go down to a lower time frame and mark that off. So just in case that some buyers do appear, that will be a line in the sand. So I'm not going to say longs from there, because again, there's a distribution in a higher time frame. But I'm going to map out some of the stuff that I'm seeing. Now, just for efficiency, I know we want to stay on Topstep X, but just for efficiency, this is the value area. So I will be drawing that out. This is the average session range low. This is overnight VWAP. There is a little bit of movement downside. So we'll see. We'll see what they do there. I'm going to plop those same levels onto Topstep X as well. Now I'm doing this manually before we get the TPOs and all of that good stuff in here, because this is still a platform in development, so obviously we're missing some stuff that I use. So 38.8 is the coordinates for that. I'm going to say that's value high for London. And then I'm going to plop in another one at 27.29.3. For value low. There it is. I'm also going to put the dotted lines for the average session range. I'm going to change the color of that to, let's say, green. Dashed line. And then 27.43.3. And I'm going to say London ASR low. So average session range is my concept. It looks at the algorithmic ranges, right? So every time you have some sort of information about how much this product actually moved on average statistically, that's the average daily range, right? But what I'm interested in is London-specific areas and ranges for which I use a shortened calculation, and my Blatic indicators are the ones that help me quite a bit to automate this process. So rather than me clicking things, all of these are already on the chart, so therefore I don't lose any time. And you guys know that I trade multiple products, energies and metals, so it allows me to just, at a glance, just look at what's going on and just go, right, okay, there's the level, and then I can go forward into my actual hypos writing. Okay, so looking at options levels, I'm going to put that on there too. So 2760, exactly where the weekly kickoff is also the core resistance from last week, or for today as well. So they haven't really moved that. That remains an area of interest. And to the downside, let's see where the average daily range is. My average daily range is around 27.29.6. Similarly, down, this is like the 24-hour range, right? So that's massive. And that's really close. Excuse me, I'm just going to clear my throat again. Morning. I'm still also getting over the stupid cold that I had. So that's not helping the activities. But yeah, so this is going to be a DR, which means the entire 24-hour range, low. So coordinates are, yeah, they're already there. But I'm going to make this as a dashed line too, just to delineate. So we have definite confluence there between ADR low and value low from London. And then further down, I do have some put support 0DT levels at 27.20. So we could overshoot. We could overshoot to go all the way down. So put support. Now, why do we look at options levels? It's because they comprise a pretty decent size of volume these days, and they will put a wrench in the works. So, you know, if you have a lot of interest at 27.20 and you know that statistical averages are around 27.30, it still doesn't negate the ADR low. However, for my purposes, I do actually like it when one of my other levels is almost exactly matching the put and core resistance levels, put supports, core resistances. However, once those levels are overshot, like let's say that it's somewhere in the middle, you can use it as a back test as well. So you kind of shoot through it and then they go back to it. Those are all areas where the market makers need to adjust their positions, right? That's where they typically get involved because that's where the most interest is. So therefore, it's not unusual to see, let's say if we have a put support level around the value high, that is going to be a much stronger setup than the setup for me where, you know, I have nothing apart from that level. Now, I do see that I have, I think this was yesterday's or last week's low. So last week's low is the similar price level as the put support 0DT. And that's probably why, right? There's always a reason why they might be looking at levels. It's never totally random. So once you start to look at things, I know for many people who might be a little bit more novice, this could be like, oh my God, so many concepts and that. But it's actually pretty logical, right? Value areas are nothing more than the distribution curve, right? Where did they spend most time? That's all it is. And then you have the algorithmic ranges. Well, how much do we move on average over the last 10 to 14 days? That much. Well, what's going to happen if we get to those levels? Well, most likely it's going to reverse. If it doesn't reverse, what does that tell us? It tells us it's an unusual day. We're overshooting the algorithmic averages, right? And then you have these additional levels to match up the other levels with. So that's the way I look at the options data for intraday trading of this sort. And that's... you know, to me, painting a very clear picture of what is happening on the day. So you can have these levels that are magnets as well. So you can have a magnet all the way down to the put support. And you can also have it bouncing from there. But again, it's contextual. You do need to know, like you can't just blindly use those levels and just go, oh, it's not working. That's like the stupidest thing ever. You know, you have to You have to do the contextual analysis. This is what we do. We're analysts. All right, let's take a look at some questions. So Jayhawk says, D, what is the IB range for crude oil, GC, and are those initial balance ranges, do they work effectively as they do on NQES? Yeah, so for the London session, there's only one initial balance, and that is the London Open, which started an hour and 7 minutes ago. However, usually once the daylight we're in a bit of a weird week, right? We have the daylight savings nonsense. Luckily for October/November, it's literally just for 1 week. In March, we have a whole 3 weeks of hell where everything is out of sync, and I absolutely hate it. Hogue hates it. Everybody hates it. Whoever's been doing this for a hot minute, and that's why all of the events that should be happening are happening slightly out of sync. So you have, for example, you would have the options expiry for the Forex markets at 10 a.m. New York, which is 9 a.m. CST. And then suddenly you have the Euro close, but now the Euro close is happening, an hour earlier. It's like, what? I actually totally forgot at the beginning of the daylight savings in March. I forgot about the clock change in the US, and then I was late for the fast markets. And Tim, the producer, was very kind to kind of be, hey, Dee, just wondering where you are. I hope you didn't get hit by a bus or something. So if you're there, we would still like you to be. And I was like, no, I just totally forgot. So that was a bit of a Muppet moment for me. So yeah, daylight savings, weird time of the year, but it's just for 1 week. So keep that in mind. Next week, we're going to be, if you're located across the pond, next week, we're going to be going back to be in sync. So usually, I know that we decided to keep this live stream at the same time in Chicago, but for me, this is an hour earlier than normal. So my setups are probably not even going to come around until 5:30 a.m. Chicago time. So for you, it's fine. But for me, this is an extra hour of the day when I don't typically trade. So I only trade from about 90 minutes into the London session, because that is when I have enough data and enough information to get involved. And, I've criticized a lot for sitting and waiting for my levels, but that is where my strength is, right? So I think I've shown this on Twitter as well. So this was this particular XFA. So, you don't kind of get there by accident, just, on a streak of 7 days. It's not, oh yeah, I just got lucky. And it's a fair amount of trading. This platform does make you look like more of a scalper, because I do scale in and out of trades, especially if I start to use multiple contracts. And even on micros, I will still use 3 to 5. And I will sometimes scale out or scale in. I start with 3, maybe add another 2, and all of that is counted as an extra trade. So really, in reality, this is between 5 and about 10 trades per day, but 10 trades is more on the side when I'm not reading the market well, which you can see here on the 18th, and the P&L also matches that, right? But for all of the other times, for example, this was Friday, obviously one of the better days. This was Tuesday. So so just keep that in mind, that when you are being more selective, you will be getting a lot better results, right? You're not going to be doing a million trades, getting a lot of paper cuts, and then getting that one trade that kind of saves the day. But even if you are a scalper, it's not going to save anything, because you're not going to have enough risk reward to do that. Now, when I do paper cuts, and I do eventually get to my bigger trade, that tends to cover most of the loss and then some. Okay, that is the secret, big secret. Again, we're talking big secrets. Of how you drag yourself out of any sort of trouble. Now, I don't like doing paper cuts, because that is actually another one of my mental triggers, because it means I haven't actually waited for enough information around my level to actually show me whether people are looking at it. Right now, we're seeing a bit of a bounce from the London average session range low, so that could go into a failed auction. But I have to wait for at least a 15-minute chart to finish. And because it's Monday and because it's so early, I would probably only do a micro just to start the week. And if it's a loss, it doesn't faze me much. But yeah, this is now a potential failed auction from the average session range low. Don't like the fact that we're still very close to overnight VWAP. So that's not great, right? That means we're just not really moving that much. So, best case scenario, we might rotate to the top of the initial balance. If I were to look for the whole Asia high, which is up at 27.56, that's probably a little bit ambitious. But we do have a reasonably strong uptrend. Yeah, we'll see. Let's see if we can sustain this candle first on this the next 2 minutes on a 15-minute chart. And if yes, might be a sustained move back to initial balance. Now, if it's not, I will have a second hypo, which I might not run, and that will be a further momentum down to close that gap from the value area from last London, right? Now, right now, it's not being sustained even on a 15-minute chart. So for now, this is again, no touch. Do not touch. And as always, this is not a signal service. Bruno posted the disclaimer. This is for educational purposes only. Follow your plan. The only thing I'm doing here is demonstrating what sort of levels I use and how I'm doing my analysis, right? So you can back test, you can use that same approach, but please back test it and then make a decision whether you connect to it or whether you may want to try it out at some point, but that will be at your own risk, as always. Okay, let's have a look at another question. Christopher says, hi, Coach Dee. I'm not sure if you addressed this or not. London time has changed. I just addressed this. Do you still trade the old time or change your trade window to match London? Okay, so I am based in London. So I just want to put that out there. So I live in London still, even though I want to move out of London pretty soon. But for the time being, I still live in the UK, in London. My London levels remain the same. But the New York levels are going to be happening an hour earlier, okay? Because we changed the time, but they still didn't, right? So they're changing their clocks on Sunday, this coming Sunday. And that's always the disparity between us and them for that 1 week and 3 weeks in March, actually. So this is a less painful thing. So when you are, let's say you do have the Blotic indicators, one thing that I like to do is to actually switch off the daylight savings thing that we have and then just do it manually. But it's a personal preference. Their DST setting, if you set it on true, again, I'm just going to do that here quickly because I can't talk and then not show it. So if you go all the way down, there is this GMT offset daylight savings. You can keep that on true, but I found that screws up my London calculation as well. So I put that on false, and then I move the start and end times, because you can control this indicator really well, right? I will move this to, this is gold, so I will move it to an hour earlier, and I will do both of those. For start and end, right? I will leave London where it is, but I might cut it off at 12, for example, because that will be the start of NYMEX for this week. And do the same for any other exchanges. Like if you're trading ES, then you will be using 1430, and that will be 1:30 and 8 p.m. So that's the best way to do it for me, just to manually control that with the actual local time zone when the cash session starts on equities, COMEX, NYMEX. So yeah, hopefully that clarifies it. So London stays the same. but we changed the start and end times for our friends across the pond because those are their exchanges, so we have to use their time, right? Should the value area be anything other than 70%, Tanner says. You know what? There's a huge kind of debate in the market profile industry because technically it should be like 68.2 to be like the proper distribution curve. But honestly, rounding it up to 70 has not really harmed anyone. And in fact, most of the indicators out there, if you have like tick size that's big enough, it will round up to the next round number anyways, which is even worse than going from 68.2 to 70, right? So for me, I use just the 70%, but I do know people who use 80%. Now I also know people who use 68%. So try it, try it both ways. For me, I tried it at 68, didn't see any difference. It was like maybe a couple of ticks difference, so no one cares, right? I always work within a zone. So anytime I call out a level, it's never going to be like, oh, hey, I'm looking at 2743.2, right? I'm really looking at an area, ballpark, like this, right? That's area ballpark, right? So it's like 10, 15, 20, even 30 ticks sometimes. If you have a lot of volume, if you have a lot of movement and things are changing quite quickly with the amount of liquidity that we get, that will mean that I will widen my zones. I just need to let my cavalier out because he's trying to get out and he's deaf, so I don't know how to tell him. All right, he's out. He's happy. Yeah, so it will always be a wider zone. So the more volatility the product has, the wider that zone will be. And sometimes, like I said, it will be 30 to 50 ticks wide where I'm expecting a reaction. So it's not down to like being super exact and, going in with no drawdown. I don't really care much about drawdowns intra-trade. And I expect them, right? I expect them because to me, that's actually, as long as the ballpark zone works within a, error of about 35, 40 ticks, I will still use the drawdown to scale into a position, right? I will not be like, oh my God, I'm freaking out, now what? I will actually use that opportunity. I have something called the maximum adverse excursion number that you can look at in most sort of journaling platforms. I don't know whether we've got it on, I don't know whether we have it on TopstepX really. And if we don't, it's certainly something that they will introduce. So MAE, MFE. MAE is your maximum adverse excursion, so how much drawdown we go into. And maximum favorable excursion, a mouthful, is how much maximum profit the trade reached during its trade life. So obviously sometimes we don't take it exactly at the top or at the bottom or whatever. We sometimes take it way ahead, right? For most people, seems to be the problem. Now, I have my ways of kind of trying to ride it as much as possible, or just getting to the next logical level. Now, for this particular trade, it really doesn't have that much of a profit margin because we have VWAP right here. It was reactive once before, so that's definitely an area to look out for. And then we also have a supply at 27.51. So yeah, it's tricky, but let's pop in just a five micro trade. So that means I will have to kind of change this to micros and then redraw the levels. Oh joy. Okay, let's see. Yeah, so no levels. Okay, great. And this is going to be 35 ticks for me. And again, I need to redraw the levels. Oh joy. Okay. I'm just going to do that fairly quickly. $7.38. And this was average session ballpark, London. All right, that'll do. Just to kind of remind me what the hell I was looking at. All right, so now we have a little entry here. Now, if I'm super sure of this setup, here I'm not entirely sure, right? Because we have some levels down here. We have the average session range low that has a decent accuracy, but it's not like 70-80%. It's more like 55-60% it might work, but I would have preferred if that actually matched up with the value high or put support level or something like that. So here I probably wouldn't be adding into this. And one way to track how the trade is doing, I can go to a 100-tick chart. Obviously I have tape and bookmap on the other screen over there, but I'm not going to be confusing things today just yet. And what do you want to see? Well, you want to see that this 100-tick chart shows you some movement. You can also do Renko charts with the same kind of thing. So plop in some moving averages there. These are the 9 EMAs. And then just wait until the trade starts really pushing. Now, if it pushes upwards, I see that there's a lot of buyers stepping in. Then I might add on to this because it means that we're going at least to VWAP. And then I will just quickly add and just take it off here. Now, because this is a failed auction long potential, if we do get that kind of a commitment from buyers, it will mean that we may have some more juice than VWAP and all the way to the edge of the initial balance, at least to where some of the supplies are coming from in Asia. Right now, we're not seeing that. So if I just lose a trade on 3 micros, on a 35-tick chart, 35 ticks, stop loss, that's absolutely fine. I'm not even slightly bothered about that. But like I said, it's one of those things where if I'm in with a bigger size, or I try doing a lot of paper cuts, you're in and out, in and out, in and out, and then you just add on to the loss, that is when people generally start to tilt, right? This is a great question. Tano says, what is the psychology in the market that leads to gap closes? Well, things get too expensive. They can't find anybody to take their orders. That is the primary reason why you get mean reversions. And a gap fill is definitely a mean reversion, right? So basically the story goes like this. You have the market that's moving, or opens with a gap, and suddenly people are like, I'm not going to pay you this much. This is like very, very expensive. I can't make any money here. So what are they going to do? They're going to try and go back to the levels and liquidity pools where they can put in trades that will not cost them an arm and a leg to go in the sort of same direction, right? So that's why you see these mean reversions. It's a very, very logical thing once you understand how the markets operate and just that whole market mechanics underneath. I like to refer to it as market mechanics because that's what it is. You know, you get too expensive, nobody's going to want to take your order. They're not going to be able to find business at those levels. Now, there is a caveat there that if you get some new information that takes the price completely to new levels, like we've seen in crude oil, it means that we are now nowhere near the old liquidity pools and we are completely traversing new waters. You know, we have areas that maybe have different options levels suddenly, and there will always be those. You know, there will always be people who are wanting to look at really, really massive levels that were far away from last week's prices because they perceive that as a good area to get involved. So naturally, interest starts to build around those areas, and that's where you see no gap fills. Nobody wants to fill the gap because we're now shooting for more. We're shooting for over there. And that's usually down to a fundamental reason. It's never really going to be completely technical because it's always to do with either an interest rate change or perceived inflationary risk, or it's going to be supply worries. If you're talking commodities, it's going to be specifically about oil. It's going to be a worry about, whether we're going to continue to have demand problems, for example. So if you have no demand, what happens? The supply is increasing, and that leads to falling prices, right? So let's say China's economy not doing particularly well. So I'm going to leave this now. Okay, so basically we're going into a gap fill for the London area. So technically you could now kind of scalp this down and hope that you're going to get enough momentum downwards. But look at what's happened to these 9 EMAs. They have started sloping downwards. When I entered the trade, they were flat. Now we have more information. They're sloping downwards. What does that mean? We are ignoring average daily range low or average session range low and going to the next point of interest, which should be 23.38, 27.38 even. Again, morning. Now again, this is London. This is an out of hours market for gold. So what could happen is that they start to just randomly pop in a whole bunch of orders and go back the other way. And this is where you get paper cuts, right? That's why I'm in with super small size. But one thing that is good about this is that now we're moving away from that VWAP. So if at some point I do still see a long opportunity, that will mean I can effectively run a long trade that will have a decent profit margin up to VWAP. Okay? But for now, this is now a gap fill down to value. And I'm not going to ask for more out of that. Because again, first couple of trades, very small size, just to kind of get you into the market without digging a massive hole right away. So just tiny 3 micros. I know some people who are like, oh, you get $4,000 in there, just plow in 2 lots. It's like, are you insane? Like, I'm not going to trade 2 lots on a Monday with a 4K account. If I see a really good setup, I might pop in a 1 lot and then maybe scale up if it already, does something. But I'm not going to be plowing here with 2, then losing 700 and then going, oh, now I have to dig myself out of that. So, 80, 90, easy to get out of. 700, 800, not so easy to get out of. So, so just keep that in mind. We don't want to dig massive holes. All right. Do you think we will close the gap on NQ today? I have no idea. I don't want to look at NQ, especially not this early in the morning. I haven't even looked at any equities today. I looked at DAX, but I didn't really see anything obvious there today, just yet. So I have no idea. We could have a look at it, but NQ just let's put it this way. It's too early for NQ. D would need a lot more coffee to look at NQ. So yeah, let's leave NQ for tomorrow, right? I don't know whether the gap is going to close. NQ is insane. I would look at ES as a benchmark. Typically when these sort of events are happening, you have people who are generally trading both ES and NQ, but then NQ becomes sort of an exaggerated move of whatever ES is going to do. So take a look at the equities as a whole, plop in ES, NQ, YM, see whether they're correlating, and then see if you can find the reasons for a gap fill in ES. That's how I look at it. I never trade, like if I'm going to trade NQ, sometimes I do. I used to 4 years ago. Then I got sick of it about 2 years ago. So I kind of moved into NQ during COVID because they stopped crude oil trading at one point, but equities were still trading, whereas crude oil went negative. So that was fun. Not. But having said that, that was one of my best years in my career, and I had a lot of room to play with NQ. So I still didn't like it, but I did a reasonable amount of trades. However, the way I was doing it, I was looking at ES and looking for whatever setup is in there, and then plopping in a position in NQ as an expression of what I think should happen in ES, but only using a higher volatility instrument to do so. And that worked for me really well. It's just that I'm a little bit older now, getting to mid-40s. I just can't, man. I need something slower, right? This is why I gravitate towards gold, platinum, copper. Crude oil can get a little crazy, but it's nowhere near crazy as NQ. And it's also very technical, so it has a rhyme and reason to its moves, even though some people are like, why? What? But if you put the levels that I have, you can see that it's actually all telling you a story. So that's the whole point with crude oil. It's extremely technical if you know where and when to look. And I mean, they're still pushing down. So whether there's any concerns over, you would think smacking into some oil fields and stuff, that will make a difference. But clearly not. Crude oil says we sell off. So I don't think we're going to get a gap fill on crude oil today. Again, I have been wrong before. Do not quote me. Do not say, oh, Dee said no gap fill today. So don't come crying to me if you do get a gap fill and you're still shorting, right? Because this is a single direction day right now, and we are ignoring averages at the moment. That is actually not a great sign for any kind of gap fill ideas, but hey, things can change, right? All right, let's see if we've got any more questions. If not, I've got some plugs for you guys before we leave. Oscar says DAX is turning. Yeah, I did see that on my other chart. It's in a failed auction. It's just I'm not very happy with the buying wick that we have. So I want to see, if we're looking at DAX, I want to see DAX at least tag value high at 195.90. Which we tagged already during the initial balance, but usually what they do is retest that, go a little lower, and then turn around again. So that's one hypo. Second hypo will be a value acceptance down into its own average session range low at 195.39. And I don't really have a third hypo. Maybe a neutral day fade. But that will be the same thing as value high test and a reversal. So yeah, two hypos today on DAX. Yeah, so we'll see. And gold, you say it's got $7 to move. Yeah, quite possibly. But we have to take note that we have been at all-time highs. Shorts, very risky. This is why I'm in a super small size. Testing a hypothesis of shorts. Gap fills, maybe a more decent pullback. We'll see. So far, pretty quiet, non-committal, kind of a downward move, but look, there's no momentum here, right? So we tried to go up, then we went a little bit down, now we're trying to go back up again. So this is typical out of hours nonsense that can throw you off. So just don't let it throw you off. If you've also tried some trades in London and this sort of thing happens, just shake it off. I hope that you're not in with like 10 lots and all of that, so that the any kind of tilt sort of situation is happening. So basically just go and shake it off, go do something else for a few hours and then come back for COMEX. So don't lose track of your mental triggers, let's put it that way. I know that paper cuts that go into $300, $400, $500. That's a huge tilt for a lot of people. All right, so I just need to do the plugs. So let me find those. Where is that? Here it is. Okay. So, as you guys know, we have live phone support again, okay? We have brought back live phone support. So, if you have any issues, you can now call the number that I'm going to put into the chat. So, that's the support number. Do not call. I implore you, do not call with resets requests, because that's not what that number is for, or discounts. It is when you genuinely have a problem, either with billing or technical issues or your account or something. But also do not call them if you've locked yourself out by accident and you want them to unlock your account. They can't do that. Not even the risk team can do that, I don't think. At least not on the XFAs and stuff. But yeah, so that phone number is literally just for the phone support. Genuine problems, right? Tayo says, good morning, Dee. It's not 9:30 in London, but you have started about 48 minutes ago. Yeah, because we are keeping the time for our American friends in CST. So that's still 3:30 a.m. because, again, if you go back through the stream, you will see why. We start or end our daylight savings 1 week before our American friends. So if you're over on this part of the world, you have a clock change. They don't. We kept it. We talked about it internally. We kept the live stream to the CST time, right? Chicago-based time. So that's why. All right. More plugs. What do we have? Did you just love it? It's like, we have some plugs for you guys. There you go. So Trustpilot, if you like what we're doing here, obviously we would appreciate a review on Trustpilot. So I'm going to put that in the chat as well. And of course, if you like anything that I've talked about here before, give me a like, subscribe to the channel. And if you keep giving likes to the London session, we can keep growing. Maybe even get DAX in here. That would be nice. Because out of everything today, yeah, crude oil just started moving, but I mean, DAX has been moving pretty nicely this morning. It's a shame. So I'm going to go and trade that on my personal account. And final plug. Final plug. Topstep Instagram. Yes, we have an Instagram page, if you didn't know. Some pretty fun stuff there. They don't just stick to the boring, markets, this, that. Not that the markets are boring, but you know what I mean. They do behind the scenes stuff. They do, stuff related to the crew and some pretty hilarious selfies. And I think Hoag's pit stories are on there as well. So well worth a look. Very entertaining. Yeah, so that's pretty much it for today. Tayo, all this week, just so you know, all this week, you may want to follow me on Twitter because I posted about this yesterday. I posted it this morning that there's going to be a change if you're over in the UK and EU, and that the London session is going to be starting an hour earlier because of that. And I explained why. So all this week, if you are over in my part of the world, all this week, we're going to be starting at 8:30 a.m. London time, not 9:30. But then from next week, when our American friends also change clocks, we go back to 9:30 a.m., okay? So that's it for today. Thank you for joining me. Again, let's start the week slow and controlled so that we can build up the profits as the day goes on and have a lot of room before we dig massive holes for ourselves, right? Thank you for joining me. This has been TopstepTV, the London session. I'm Deeyana Angelo, and I will see you again tomorrow. Take care.